Assalamualaikum. We are Group AM2354A and today we will be presenting our SEC 426 Session 1 case study on Zuraida Yahya. In this presentation, we will discuss her resident status, employment income, business income, partnership income, industrial building allowance, and finally her personal income tax computation. And my name is Najwa and today I will be present the resident status of Zuraida Yahya. Let's begin.
Now I would like to explain Zuraida residential status from the year of assessment 2022 and 2025. We can see that this is the date where she traveled outside from Malaysia. She returned, come back, stay in Malaysia, and then travel overseas again. And then she go. Lastly, she go to the Thailand for attend to work related costs. If we calculate her physical present, she was in Malaysia for only 140 days, which is less than the required 182 days. That normally this would mean she is non-resident. However, because she absent to Thailand was temporary and directly related to employment, the period can be linked to her stay in Malaysia under Section 71B. Therefore, for the year of assessment 2022, Zuraida is treated as a resident. Next, for the year of assessment 2023, Zuraida remained in Thailand until 5 January to complete the course. Then she returned to Malaysia and still continues for 6 January until 1 July, giving her total of 18200 day in Malaysia since she fulfilled the minimum requirement of 182 days. She qualified that residence under Section 71A. And this is the most straightforward residency rules because it is based on physical presence in Malaysia. Moving on to 2024, Zuraida, who is outside from Malaysia from 1 January until 12 April, she stay in Malaysia from 30 April until 11 October, which is exactly 182 days. Therefore, she once again satisfied the 182 days and it's considered resident under Section 71A. And finally, Zuraida stay in Malaysia 1 January until 30 March and again from 1 July to 27 September, giving 178 days. Although it's less than 182 days, she still qualified as a resident under Section 71C because she was present in Malaysia for more than 90 days and she had already been a resident in 3 of the 4 preceding year, which are 22, 23 and 2024. So in conclusion, that Zuraida is considered a tax resident every year but under different provision of the Income Tax Act, and she is a resident under Section 71B, Section 1A in both in 2023 and 2034 and Section 71C in 2025.
Assalamualaikum, my name is Marina Piti Mazlan and my number matric is 2025241138. Now I will present the employment income assessment for Ms. Zuraida Yahya for the year assessment of 2005. The employment income is calculated under the Section 13 of the Income Tax Act 1967, which includes the cash remuneration, benefits income and living accommodation. Firstly, under Section 13, Clause 1, Clause A, Ms. Zuraida received an annual salary of 2,000 ringgit, a bonus of 8,000 and entertainment allowance of 12,000. She also received a travelling allowance, but only 18,000 is taxable after the 6,000 exemptions. In addition, her share option benefits of 2,000 and 1,200 ringgit reimbursement are taxable, while the parking allowance and work-related training fees are exempt. Therefore, the total under this section is 161,200 ringgit. Secondly, Section 13, Clause 1, Clause B, the taxable benefits in kind include a company car, food, driver, maid, golf club membership, electricity and furnished accommodation and also a part of the leave passage. So the total benefits in kind is 47,250 ringgit. So lastly is under Section 13, Clause 1, Clause C, which the value of the employer Provided accommodation is RM33,403. After combining all the components, the gross employment income is RM241,853. After deducting the allowable expenses of RM37,800, Ms. Zuraida's statutory employment income is RM2,450. So in conclusion, the employment income has been assessed correctly by including all the taxable benefits while applying the relevant assumptions and allowable deductions under the Income Tax Act 1967.
Assalamualaikum and good morning. My name is Wan Nonada Fasihah binti Wasipan and my metric number is 2025241296. Now, I will present the business income computation for Mr. Zuraidah Yahya for the year of assessment 2025. Firstly, the business recorded a net profit of RM132,000 based on its financial statement. However, accounting profit is different from taxable profit, so several tax adjustments are required to determine the statutory business income. The first adjustment is an insurance recovery of RM45,000, which is added to the business income. Next, we deduct other income that is not taxable under business income. This includes interest income from customer amounting to RM24,000 and rental income of RM18,000 because both are assessed separately under different sources of income. After that, we add back non-allowable expenses. The first item is depreciation of RM28,000. Depreciation is an accounting expense and is not deductible for tax purpose because it will later be replaced by capital allowance. Another adjustment is the EPF contribution. The company contribute RM38,000 but only RM32,300 is allowable under the tax rule. Therefore, the excess RM5,700 is added back. The remaining expenses such as salaries, staff welfare, legal fee and training expenses are allowable, so no adjustment is needed. The business also made a donation to an approved institution amounting to RM12,000. This amount is adjusted separately according to tax regulation. In addition, office renovation cost of RM39,000 and office equipment costing RM33,000 are capital expenditure, so they are not deducted as business expenses. After making all the required adjustment, the adjusted business income is RM289,200. Then, a balancing charge of RM11,000 is added, while capital allowance of RM45,000 are deducted. Therefore, the statutory business income for the year of assessment 2035 is RM255,200. In conclusion, this computation ensures that only taxable business income is assessed after considering all allowable and non-allowable adjustments in accordance with the Malaysian Income Tax Act. That's all from me. Thank you.
Assalamualaikum everyone. My name is Nurul Sabina and now I will present the partnership income assessment for the Stylish Boutique Partnership for the year of assessment 2025. First, the partnership reported sales of RM210,500 and a net profit of RM50,000. However, during our tax review, several expenses were identified as non-allowable under the Income Tax Act. These include depreciation, donation, partner salaries, drawing and interest on capital. Therefore, these amounts are added back to arrive at the provisional adjusted income of RM53,500. Next, the partnership salaries, drawing and interest on capital are deducted as partnership prior expenses, resulting in a divisible income of RM72,000. Since there was a change in the profit sharing ratio during the year, the divisible income is allocated according to the respective partnership agreement for each period. After allocating the divisible income, each partner's salaries, drawing and interest on capital are added back to determine what their individual adjusted income. We then included the balancing charges and deduct the capital allowance to arrive at each partner's statutory income. Based on our assessment, Mrs. Zuraidah Yahya's statutory partnership income is RM137,800. Mrs. Zurina Zaid is RM160,200 and 950 ringgit, and Mrs. Rina Aimans is 86,750 ringgit. This amount will be reported by each partner individually in their personal income tax return. In conclusion, the partnership income has been assessed by adjusting non-allowable expenses, allocating the divisible income according to the agreed profit-sharing ratios, and applying balancing charges and capital allowance before determining each partner's statutory income. That's all from me.
First, the qualifying building expenditure. Out of the total cost, the cost of the land, heavy machinery and site preparation for machinery are strictly excluded under standard public ruling. Only the core building costs like construction, architect fees and basic utilities are accepted, bringing the raw QBE to 570,000. Second, the 10% rules of area test. The administrative office occupies 20% of the total space. Because of this, exceed the allowable 10% threshold for area, the office portion does not qualify for IBA. Therefore, the QBE is scaled down to reflect only the 80% factory and warehouse area. The adjusted QBE is exactly 456,000. Finally, for year assessment of 2025, since the building was completely and put to use on March 21, 2025, the company is entitled to the standard rate a 10% initial allowance of 45,600 ringgit plus a 3% annual allowance of 13,680 ringgit. This brings a total claimable IBA to 59,280 ringgit for this year. This remaining residual expenditure of RM 396720 will carry forward to the next year. There is no balancing charge since no asset disposal took place for this year. The total amount, which is 588,763 ringgit, calculated from an aggregated income of 610,076 ringgit minus with the 22,000 cash donation to a school library. This compromised by the net business income that we get 383,000 from the Skyline Horizon Travel Enterprise and also Stylish Boutique. Employment income with 204,053 ringgit, net rental income with 3,170, net royalties which is 20,000, and also for the total tax relief, which is we get 48,685 after the total personal deduction claim including basic individual relief, parent medical costs, restricted lifestyle expenses, insurance premium and child relief for 5 children, which is Ayuni, Noah, Reza, Nisha and also Akila. Chargeable income, which is chargeable income, which is for 540,070 ringgit. The final taxable income amount remaining after all personal relief are subtracted from the total income. The total gross tax liability, which is 120,820 ringgit with 28 cents, by calculated using the progressive tax bracket, which is the first one, 400,000 is taxed at the 84,400 and the remaining, which is 140,070 ringgit, the balance is taxed at 26%, which is we get 36,420 ringgit point 28 cent. The zakat rebate, which is the 13,000, a direct dollar for dollar reduction of the tax bill from zakat pendapatan payment made via the PPZ portal. The net income tax liability, which is 107,820 ringgit point 28 cents. The final net tax payable after the zakat rebate has been fully deducted from the gross liability. That's all from us for all the tax information and statement. Thank you. Dah tu je.